Hi friends, in this video I want to speak about a buzzing stock that operates in three sectors. Sector number one is education, number two is real estate, and number three is investing or the capital markets. Majority of us have used the services of this company at some point in time in our life. The name of the company is Info Edge India Limited. So brands such as Naukri.com, 99acres.com, Shiksha, Jeevansathi.com are all part of Info Edge India Limited. Now the reason I'm speaking about this stock today is because in the last 1 month, if you look at the chart here, you will see that in the last 1 month, stock has given close to 20% returns. Now the question is, could this rally continue further? Can this stock become a multi-bagger stock in the next 3 to 5 years? And more importantly, what is causing this rally is what we are going to understand in this video. Now, before I deep dive into this stock and give you a lot of data and fact for you to make decision, one natural question is, how do we shortlist good stocks? So on my channel, I have created a lot of videos where I've used multiple screeners and how to apply relevant filters to the stocks. You will find those videos on my channel. But Info Edge India Limited, I found through a demat platform called Shunya by Finvestia. Let me show you how. So first is to log into your account, Shunya by Finvestia here. And then what you will see is this screen here, dashboard you will see. Then click on I know first. Then come down here and say get started now. You will see the stocks that are likely to give positive returns in the future. And you will see the stocks that are likely to give negative returns in the future. Now I can filter these stocks by either market cap, which is large cap, mid cap or small cap. Also, I can select my time frame here. So for example, if I'm looking to invest in a stock for 1 year, I will click on 1 year here. And this platform will show me top 10 stocks that are likely to give positive returns in the next 1 year. Now, I don't know how this tool is shortlisting these stocks and I cannot blindly go and invest in any of these stocks. Therefore, what I do is I take this shortlist and I do my own analysis. And this is where I see Naukri.com here listed, which is Info Edge India Limited. And I am now going to do a deep dive analysis of this stock in this video. Now, currently this IKF service that this platform has is absolutely free. In future, it might become chargeable. I don't know about that. If you want to use this feature, first you will need to open a demat account with Shunya. Go to the link in the description and follow the instruction to open a demat account first. Their demat account opening charges are 0. The annual maintenance charges are also 0. And if you trade using this platform, delivery charges, intraday charges, etc. are also 0. I've also checked and they're SEBI registered demat broker. So we can trust them with our data. Once you open your account, you will need to go to a different link to get to I know first feature that I've just shown you. And to make it easier, I've also given you the link of IKF in the description. The only humble request I have is that do not blindly invest in any stocks that this platform is showing. What I've shown you is a method of shortlisting the stock, and then we do our own individual research to make informed decisions. So with this, now let me give you 5 to 6 very critical points about Info Edge India Limited. The first critical point that we need to understand is have a look at this stock chart for the last 5 years. And you will notice that the stock used to trade at around 2,500 level back in 2020. And after that, there is a massive rally here that is going up to 21, major part of the 21, and the stock hit all-time high of close to 7,000 levels. Then there is a massive decline here coming down the good part of 2022. And now the stock is again going to go back up to 6,000 levels that I can see already here. Whether this rally continue or not, we will speak about that. But the critical point that you will note here is that the stock has shown cyclicity. Of course, the cyclicity here is on a longer duration period that you can see here, but definitely the stock has shown a cyclicity. What is leading to this cyclicity is what we need to understand so that we can take some safe bets on this stock. So for this, let me show you what actually happened in fiscal year 21. And if you look at this data, you will see 2 critical points here. Point number 1 is that 80% of the company's revenue are coming from recruitment, which is Naukri.com. So fiscal year 2023, this figure is all in millions. So just divided by 10, you will get into crores. So here, 1800 crores is the revenues that they are getting from Naukri.com in fiscal year 2023. And total revenues of Info Edge was around 2300 crores, right? And if you do the maths, it comes out to be 80%. So the first point to note here is that 80% of their revenues are coming from Naukri.com. But more importantly, second critical point here is that Naukri.com's top line grew by 72% between 21 and 22. You can see the data here for yourself. So 80% of their revenues have grown by close to 72% in just 1 year. That is an abnormal growth. It is 2.5 times growth than the normal growth that the company generally does. So for example, normal growth you see here between 22 and 23 is 29.4%. But in that particular year, what happened was their growth was close to 2.5 times in terms of the top line. Now, what led to this growth also we need to understand, because I'm taking you really deep into this analysis so that you understand the complete picture of this stock. Now, if I come down and show you what actually happened, I was reading their annual report of 21-22 to understand what really happened there. And one of the key statement here is that in 21, the good part of 21, IT hiring was at peak because we came out of the COVID and IT hiring was at peak. 4.5 lakh employees were hired in the IT industry at that time in 2021. And if I show you some data, 50% of the revenues of Naukri.com comes from IT jobs. And this is the key point to note, that 50% of their revenues of Naukri.com comes from IT sector. And if IT sector is doing well, then the company's revenues from Naukri.com is going to go massively crazy. And if the IT sector is not doing well, then the company's revenues are going to go down. And this drives 80% of their revenues. And this is where in 21, the revenues were very high from IT, from Naukri.com. And therefore the share prices soared like anything. And if I come back to the chart and show you, then good part of the 2022 saw a very steep decline in the IT hiring. And as a result of that, their revenues from Naukri.com started to slightly soften out. And that is where the stock prices started coming back to the lower levels. I hope this key point is very clear to you. So whenever you want to take entry in this stock, what you need to really see is how's the IT hiring going to play out in the, let's say, 6 months, 1 year's time. And accordingly, you can assume that the revenues of this business is either going to go up or come down. I hope this first critical point is very clear. Let me now move to the second point. So the second critical point is around cash richness of this company. And what you see on my screen is the cash and bank balance. Okay. And if you see in fiscal year 20, the cash used to be at around, this is 12,000 million rupees. So let me divide it by 10. So it comes out to be around 1,200 crore rupees, right? I'm saying 1,200 crore rupees of cash back in COVID time. And this cash has now gone up to 3,100 crores in fiscal year 2023. So the cash and bank balance of this company is growing year on year. Why is this happening? Why is this company sitting on such a huge cash and bank balance is what I need to discuss with you. And for that, a very simple explanation you find again in the same chart is their operating margin percentage. You see, operating margin percentage back in 20 used to be 27%. It's a very good operating margin percentage. And it has even gone further to 34%. Now, what is operating profit margin percentage? In a very simple layman terms, just understand how much variable cost a company is incurring to be able to serve its customers, right? To be able to earn money from customers. This is a very simple explanation I can give you, right? Now, if you see the cost model of Info Edge India Limited, platforms such as Naukri.com, platforms such as 99acres.com, there is no variable cost here to serve more and more customers. It was only one-time cost to build the platform. Once the platform is built, now whether you have 10 customers coming through the platform or whether you have 1 million customers coming through this platform, your variable cost is not going to go at the same proportion. So for example, you might need a little bit more storage to hold the data for these customers, but then your fixed cost was one-time investment. You're not incurring every time you add a customer, you're not incurring massive cost to the platform. And that is where over the period of time, variable cost to serve the customers is not increasing at the same proportion at which the customers are growing. And this is where their operating profit margin is going up every year. Now, we don't know whether this can continue to go further up, but right now this is looking very healthy. And this is the key reason the company is generating a lot of cash, because their cost is less to serve the customers. And therefore, if the revenues go up, then their profits are going to go very high. And that is why precisely the company is making good money right now. Now, what do this company do with this cash? And this brings me to the third critical point about this stock. And what you see on my screen is that almost 81% of their assets are into investments. They have invested these money into funds and assets that I will speak about in a minute, and remaining 14%, the majority of that they're holding as cash. But this 81% investment that they've done in startups, as you can see this chart here. Which are these startups? Let me show you some data here, and you will see here they have invested in companies such as Zomato. So they own 13%, almost 13%, 14% of stake in Zomato. They hold around 12%, 13% of stake in Policy Bazaar as well. They also have invested in more than 20 companies that are unlisted, right? Major investors, for example, they've given Shop Kirana, Shipshi. All these companies are unlisted right now, and they have already invested in these companies. They had also created a venture fund, and they're investing heavily the money that they're earning through Info Edge India Limited's revenues. Now, this money can grow leaps and bounds. Rahul, you are just making things up. So far, whatever I've presented in this video is absolutely all data based. And let me now again back up my statement with some more data. For example, have a look at this chart and you will see that they invested in Zomato back in 2010 when Zomato was barely starting its operations, and they put in seed money for Zomato. And I was reading this Twitter note here from Sanjeev, I think a year back. Sanjeev is the founder of the company, and you will notice here that Zomato share prices, if you look at the current prices, what is going to happen is that their returns, InfoEdge return is close to 1267 times, considering Zomato's price at 152, right? Because they invested in Zomato long back, like almost 14 years back, and they continued to remain invested in this company. Now they are getting 1,000 times returns from that Zomato. And this is the point that I say that this company has already invested in 20 startup companies that are not even listed. So they're investing in startup ecosystem, and that is where if they get their bets right, this money that they're earning from InfoEdge can give them 1,000% returns, 2,000% returns. Although there is a risk here as well, which is that they might lose money as well, right? For example, back in 2021, InfoEdge had invested in 4B networks and they had to write off 288 crores because the company was not doing well. So of course, they're doing these investments, and some of the bets will give them 1,000% returns and some of the bets will take them down. But the point here is that they have got huge money that they're investing right now in a lot of companies through the third sector that I call capital market and investments. So far, if you're liking this analysis, humble request to hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with more content for you at zero cost. With that, let me move to critical point number 4, which is the valuation of this company. If you look at the PE ratio of this company, it is trading at around 372, extremely high PE. But the PB ratio, if you see, it is at around 4, while the industry PE is at around 2. Of course, industry here could be anything. I think this is where you need to see whether you are comparing this with the tech stocks such as Zomato, for example, or Paytm, etc. Or you want to look at the sector specific. This is a call that you have to make. But if I come and speak about both PE and PB in slightly more detail here, so let's go back to the chart here and let's say price to book value first. You will see here, last 5 years data, you see the median price to book value of this stock used to be at around 9.7, around 10. Right now it is trading at around 4, which in my view is quite low. And the key reason here is that we've spoken about how this company has got very good assets in their balance sheet because of investments they have done and because of the cash that they're sitting at. Right now, from a PB perspective, this looks a very undervalued stock because of the median PV that we see in the last 5 years. But if you look at the price to earning ratio, if you go back to price to earning ratio, you will see the median PE the company used to trade at around in the last 5 years is at around 125. Right now it is trading at around 347. So almost double the median PE. But more importantly, if you see at the peak time, it used to trade at around crazy PE of 3000 levels, right? Right now, from a PE perspective, it is trading at around 347. So yes, from a PE perspective, the company is sitting at a very high PE. So out of the two valuation metrics, PE is showing us overvalued, but from a PB perspective, it is showing undervalued. So the decision to invest in this company will be all yours. Right now, the stock is rallying. So in my view, generally what I do is I never invest in a company when it is hitting all-time high. I rather look to buy the stock when stock is correcting, because that is when the opportunities really lie. In fact, other critical point that I want to leave with you is that whenever you investing in stock, do not invest all your money into one single go. So for example, in any stock, XYZ stock, you want to invest 1 lakh rupees. What do? You divide this 1 lakh rupee into multiple chunks. So let's say 10 chunks, 10,000 each. And whenever there is a correction in the stock, and if you like that stock, if you are happy, and if you have conviction in the stock, you might put 10,000 rupees. Patience is the key here. You can't just invest 1 lakh rupee all of a sudden in one go in one stock. What you need to do is divide your capital and invest this capital into various tranches into the stock rather than investing in one go. To sum this up, I found this stock at Shunya by Finvicia platform, DMAT platform. If you want to open a DMAT account, the link is in description. And we learned about 4 critical factors of this stock. Number 1 is IT hiring drives the revenues of InfoEdge India Limited. Key factor to note. Number 2 is the company is sitting at a very high cash balance. And number 3 is that they have invested a lot of money in startup ecosystems. Therefore, their balance sheet is looking very healthy right now. And number 4 is from a valuation perspective. From a PE perspective, the company looks overvalued right now. But from a PB perspective, it looks undervalued right now in my view. I hope you enjoyed this video. Hit the like button if you did. Let me know in the comments a simple thank you. And I will see you in my next video. Until then, keep rocking.